Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Monday, February 4th, 2013. I am recording this before the Super Bowl, so I cannot tell you how the Super Bowl is going to affect the market, but I'll cover that next week when we have our next meeting. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. The indexes again continued on up, and for the week we see they were all up basically around 1%. Looking at the Dow, the NASDAQ, the S&P 500, and the Russell, we see 0.8, 0.9, 0.7, 0.7. For the year, after one full month, we see we're up almost 7% on the Dow, headed for that 15,000, breaking and closing above 14,000 for the first time in 7 years. NASDAQ up 5.3% for the year, lagging because of Applenomics. And of course the S&P up 6.1%, and the Russell leading the way up 7.3% for the year, as we saw positive numbers coming out of every index for the week as the rally continues in this new year. So as we come to the end of this first month, we see the January effect has taken effect, and we see that it's been a positive month. We saw the Santa Claus rally, and it was positive. And so the first 5 days of January were positive. So basically what it looks like is we could potentially, based upon those criteria, be looking for a fairly decent year out of the market and the S&P. Notice, though, the one thing that was negative this last week is that we saw that GDP contracted in the fourth quarter of last year. So that's not exactly great news. Was it due to the fact that everybody was kind of holding their breath, not really putting out because of the election and fiscal cliff? I think those things are real possibilities, as we in general see pretty good numbers coming out of most of our forecasting. Finally, looking at this coming week, what are we going to see? What do we got going on? Factory orders on Monday. Tuesday, ISM non-manufacturing on the previous month. Wednesday, not much happening. We'll X that out. Nothing to worry about on Wednesday as far as scheduled economic news. Thursday morning, of course, we'll have our jobless claims at 8:30, productivity and costs at 8:30 on Thursday morning. And then Friday, we'll have international trade and wholesale trade on Friday. So nothing really all that moving for the week as we continue our chug up. In fact, let's take a look at that chug and see what we look like. Look at, we just keep following up the top of that upper trend line, and notice we're just kind of following up on the Bollinger Band. So what kind of situation are we in? Well, since November, we are in an uptrend. We had a bit of a pullback immediately after the election, and then when the fiscal cliff got solved, look at this thing took off, and now hasn't even had any kind of pullback. We certainly are overbought in the market, one would think, but not yet ready to pull back. So uptrend and an uptrending market and an upcycle, as Friday we had a huge day in the market. Now let's look at the overall week, and we see that looking at the last 5 days of the week, we see that there they are, 1, 2, 3, 4, 5. A little bit of a pullback during the week, but I mean not even close to pulling back to the 30-day, not close pulling back to the 50-day, and we're sitting with our 200-day below our 50, which is below our 30. We are in an uptrend, and we headed for new highs on Friday, with the S&P closing above 1,500 and the Dow closing above 14,000. Let's take a look at the Dow, and there was what we see. Same type of chart. Dow has been moving straight up since we had the fiscal cliff announcement. Did we have a pullback last week? Yes, we had in the Dow. On Tuesday we had an up day. Wednesday we had a inside day, telling us nothing. Got a lower low and a lower high on Thursday, and then of course Friday morning this thing took off and kept running all day long, closing strong into that close. Taking a look at the NASDAQ, where we see that we had Apple disappointing and not doing what Apple is doing, leading all of the overall market. We see that we also had a great day on Friday as we had a gap up and continued on up. Strength in out of the NASDAQ. And you notice, according to the Bollinger Bands, we have room where we can go higher during this coming week as we break into February. Now let's take a look at the Russell, and finally with the Russell we see that with the Russell we had a very similar picture, following these trend lines up, following the top of the Bollinger Bands, ready for a pullback. When will it happen? Well, it will. Something will make it happen. Doesn't appear to be taking place yet. Dow 14,000 certainly is a milestone. We've got room above us. Now you hear them talking on TV. The babbleheads are talking about Dow 15,000. Could very well see that in the coming year. Looking at the VIX, our fear index shows us there is very little fear as we're below 13, well below the normal range of the VIX, and we see that we're spending time with low volatility in the market and therefore low premiums for you option traders out there. All right, looking at the bonds, we see the TLT, our E-sector, our ETF sector for bonds. We see that we had a gap up on Friday, and this thing pulled back to new lows with volume, as we're seeing the bond doing the opposite of what the overall markets are doing. Taking a look at the financials, which of course we would expect to lead up as the market leads up, that provides a reason and stability to our rally, and that's exactly what we got as this thing has been continuing up further and further. Big volume on Friday, the last day of the month. Now let's go ahead and move forward one other sector. Let's take a look at the oil sector, and we see that it's been rallying with the overall market, continuing with the overall market, and moving on up. Did not get a new high, stopped out at a previous high from Wednesday in oil, but a bit of a rally as we see the oil moving up. That safe haven of gold, are people afraid? Are they shoving money into gold? What's it doing? Well, we see that it is just kind of laying dormant in a downtrend, 250 and 30-day moving average. So gold is pulling back some. Will it head back up higher? Well, market conditions certainly could make that happen. What kind of volume did we have last week as we continue with this overall rally? And we see there it is. We were using, had basically pretty strong volume the other 2 days out of the 5, and average volume the other 3. Continuing with that uptrend in an uptrending market, as the SPY showed us exactly what kind of volume we're talking about for that overall market. So that's the market that took place during the last week. We continue with this uptrend. We closed out July. We're going in strong. We certainly are overbought. We will get a pullback, but it doesn't look like it's going to be much of a pullback unless we have some huge change. A little bit of a negative news with the pullback in the GDP, but as it looks, the market didn't care. And with that thought, this is Butch Shorak. For those of you that are gold members, stick around. We'll take a look at our stocks to watch as the market's pulling up. And for those of you that would like more free videos from Options University, go to www.optionsuniversity.com/free gold. The rest of you, this is Butch Shorak, Options University. It's Monday, February 4th, and when you get this, the Super Bowl will be over and another football season will have bit the dust. And remember, there is a correlation between who wins the Super Bowl and what the market does during the coming year. We will talk next week. Butch Shorak, Options University. Thank you for being here.